The federal government's proposed increase to the capital gains tax is drawing criticism from Ontario. The plan is to make individuals and businesses pay taxes on a larger share of the capital gains they earn, like from the profits off the sale of stocks or an income property.
Do you know who this is going to affect? The people that take care of us most, doctors. When they sell that little business, no matter if it's X-ray clinic or MRI clinics or whatever clinic it is, guess what? They're getting gouged. They're, out of all the work they have done, they're going to get hurt the most.
Paul Healey is among those physicians concerned about the changes being proposed. He's an emergency physician who also runs a discussion group on Facebook for thousands of Canadians in the same practice. And Paul Healey joins me now. Dr. Healey, it's good to meet you. Thanks for taking the time.
Thank you.
Help me understand why an increase in the inclusion rate on the capital gains tax is such a concern for doctors.
Well, you have to understand that doctors are small business owners, just like your accountant or an auto mechanic. And we use a structure like a lot of small businesses called incorporation. And when we're incorporated, the big reason that we have corporations is that we use that as a means to save for our retirement. And that was something that was given to us rather than an increase in fees over the years. So we're using this to save for our retirement. And now we've been told that a significant portion of that is going to be clawed back with these tax changes. That's a lot like someone who has a pension. If you're one of the 50% of Canadians who's lucky enough to have a pension, that would be like someone reaching in and taking a significant portion of that away. So it's very difficult to reconcile this, especially when you look at the context of what else is going on in medicine now, making it more difficult to practice.
Okay, the ability to incorporate as compensation for a lack of fee increases would have been in negotiations with provincial governments, correct? That's where that would have happened, and this is a federal tax change, so it's two different levels of government, right, at play here. I'm understanding that correctly? Yeah, okay.
You're correct. But the provincial government is obviously going to take advantage of whatever they can to move an offer forward. And so offering incorporation and making that available to us as a federal and provincial ability that we were offered, more than a decade ago, is something that was part of Ontario negotiations that we assumed would be there for us.
So, forgive me, I'm going to kind of pry into, I guess, your finances on live national television to try to understand how this incorporation works for a doctor. So the money you're talking about using for retirement, is this a series of assets that you would sell in an individual year and claim the profit on, or are we talking about bundling up a medical practice that would constitute a small business and selling that, for example, and realizing the capital gains on this? What's the approach doctors use here and how that works? Because there's different implications for different ways of doing this.
Yeah. There's two ways that you can approach this. Many small business owners will use their corporation as a means to save for retirement. So they'll have assets there that they tend to distribute slowly over the course of their retirement, as they're no longer working. So that's one way that you can use it. And that's one way that capital gains are an issue. With practices, yes, some practices are able to be sold, but truthfully, the value of a medical practice has decreased significantly over the years because there's just such high demand. A young physician doesn't have to go and purchase a practice from someone else. They will simply put out their sign and have a practice. Now, there are going to be issues with buildings and assets that you may own. And yes, it will come up in those situations. But both of those approaches are used, and capital gains affect both of those for physicians.
Okay, so let's just start with the slow sale of assets to pay for things. The increase in the inclusion rate only applies to profits on an annual basis north of $250,000. So at $250,000 or less, it's the 50% inclusion rate that existed under the rules you set things up on, and that would apply. It's only on the excess over $250,000 where the inclusion rate goes up to 66%. A lot of Canadians will never realize the capital gains of that rate, is the argument the government makes.
Yeah.
Sorry, go ahead.
I'm going
Go
to
ahead.
correct you there for a second there because
Okay.
there's a misunderstanding there. The $250,000 rate is for people personally.
Right.
So if you're operating as a sole proprietor, then that $250,000 in place. However, if you are incorporated, that same exception was not provided.
Right.
So
Okay.
everyone who has a corporation or small business owner, now every capital gain they have is going to be taxed at the higher rate. So you have to be careful about that misunderstanding. If you're operating as a sole proprietor, then that may be true and that may be possible for you. However, you also have to remember that with big sales, if you're, for example, selling your physical space of the building that you may have purchased at one time, that will still be an issue even if you are selling it personally. But
Right.
remember, there's an important distinction that the government has made with small businesses and with corporations, that you will be paying that increased capital gains tax every time.
Right, but if you sell the small business, then help me understand then the interaction of the lifetime capital gains exemption that exists for small business sales, fisheries ventures, farming ventures. That was $1 million of profit that was tax-free until this budget. They're now increasing that to $1.25 million. And then the next 250 is the old rate. And then, so you need to get over $1.5 million before you get into the new rate. And if you have partners in that, they each qualify for that exemption. So how much of a hit are we talking about here, Doctor, in terms of understanding the trickle-down financial hardship? Because I know it's a change and I know it means less money, but is this the sort of like change that truly could drive medical professionals south? What does it mean in terms of dollars and cents, do you think?
Well, first of all, you have to put this in context. And I want to bring up something in particular that the government has done that has made this a bit difficult. They have set this June 25th deadline, essentially to realize capital gains and pay the old tax rate, or wait till some point in the future and pay a much higher tax rate. So it's creating a difficult situation for people who expected to have savings that they would use, where they're in a situation where they may have to save all or sell all or a significant portion of their retirement savings to try and realize a lower tax rate. So that is extremely difficult. So in that situation, you may be asked before June 25th to pay a significant portion of your retirement savings to the government very quickly. And the government has done that for a reason. This is a very unusual thing to say, well, we're only bringing this tax change in on the 25th because they're hoping to trigger a huge sale of assets and reap the benefit of a large capital gain for budgets this year for the government. Now, you asked, I want to follow up on the second part of your question, is this going to keep physicians from practicing? You have to put what's going on here in context of everything else that's happening in medicine right now. There's a crisis in family medicine. If you have a family doctor, take care of them, because if you lose them, you're likely not going to get another one. And you have to understand the reasons why that's happening. Inflation, everyone understands. And inflation over the last decade has increased 25%. But the fees for example, family medicine have only increased about 6%. Family doctors are business owners, but they can't raise their prices. They're reliant on the price that the government gives them. So you're finding that family practices or medical practices, you're just having a hard time making ends meet because all of your costs have increased significantly and your ability to collect fees is not under your control. Physicians don't charge patients directly, nor do they really want to, but we're reliant on the price it gives you. So then when you then tell physicians, okay, we know that inflation is going up. We know your fees aren't keeping up with them. And now, those retirement savings, we told you that you'd be able to do this. Those are going to be taxed heavily too. It's a problem. And you asked, are they going to leave and go somewhere else? The issue is, are new ones even going to sit in the chair? You can train a medical student, you can train a family physician, but if they start to look at the numbers as a small business owner and decide that it doesn't work out, regardless of how dedicated I am and how much I want to help my patients, the balance of the ledger doesn't work, they won't do it.
No, look, I can appreciate that. And it's the one area of medicine where enrollment is way down and lack of specialization in family medicine is way down. And I can appreciate all of that. I'm not asking these questions to dismiss your concerns, is to understand it. Because one thing, just as a final point, Doctor, is the Canadian Federation of Independent Business, which speaks for a lot of small businesses, it's not necessarily a fan of an increase in capital gains, but they did say that their analysis suggests most small businesses would be unaffected by these changes or better off because of the increase in the threshold for the lifetime capital gains exemption. Would that not apply to doctors as well, or is there something I'm missing here on most small businesses and incorporated medical practices here?
Well, I haven't seen, the report that you're talking about, so I
Mhm.
can't really comment on it. I can say right now that I'm familiar with the financial picture on a lot of physicians in Canada, and this is a big concern for them. This is something that is changing the attitude towards medicine that's been going on for a long time because of what we're facing post-pandemic. So, capital gains, again, it has to fit into the picture of everything else that's going on. And I've tried to characterize, why it's an issue that, you are going to pay a significant amount of tax
Yeah.
in a structure that you assumed you would be able to utilize better in the future.
No,
And those were taken again instead of fee increases.
yeah, no, and Doctor, I appreciate it. It's good to understand how it all interacts because, well, the vast majority of Canadians are not in that situation. They're not incorporated, and they don't know how it works. So I want to thank you for taking the time to speak to us about this. We really appreciate it. Dr. Paul Healey, thank you, sir.
Take care.